All right, welcome everyone. This is Bob Maurer. It is Friday the 9th of May, around about 4 o'clock ish. I want to do a deeper dive into two strategies that were benchmarked recently. They are numbers 357, it's a bull spread in live cattle, and 358, it is a bear spread in coffee, the C contract for coffee. So let's hop on into the portal, look at the PDF. All right, here we go. So 357, bull spread, August, October live cattle. Have the entry dates, exit dates, and all the data we need. And then 357, last one on the bottom there, bear spread in coffee, July SEP. All right, let's hop into the charts. So make sure everybody's on the same page. Talk a little bit about the backstories. Okay, so this is the bull spread in live cattle, number 357, long August, short October. Margin requirement 550. Risk rewards, we only have one exit target on this one, so those are pretty simple. The backstory on this one, it has been a profitable strategy 11 out of the last 15 years. The losing years were 2021, 18, 13, and 11. When I size up the incoming price relative to the chart you're looking at right there, our benchmark is 210, so our incoming price is 210. Those losing years, the price had been lower by a fairly substantial amount. And in terms of the structure, I don't see a whole lot of correlation between what you're looking at right there, the chart we're trading, which has been on a really strong rally, compared to what happened in those losing years. It was more of a sideways to lower affair back in those years. Normally, we look for strategies that have a greater success ratio than 11 out of 15 years, say 12, 13, 14, or even 15 out of 15. But because of the big bull run in this live cattle market, the fundamentals have been really strong. And I thought that this would be a reasonable spread to look to try to get into, just for those fundamental reasons and the big bull run that's already had. So that's why we're going with this one. Also, in at least 2 or 3 of those losing years, the market had recovered substantially enough from its worst level to its close. So even though it lost money, there was recovery from the worst equity to the close. So we're looking for price improvement. So I'm not as concerned about the fact that it was a losing year, because we're looking to better our price that we're in the spread at as part of our strategy. So that's where I'm at with that. That's where my mindset's at with that. So how much room are we giving this? Well, the benchmark was 210. It is 210. Stop level is negative 30. So that's 240 points, which equals $960. And that would have been enough room to stay on board 15 out of the last 15 years. So we're giving it ample amounts of room. So what's the strategy? We're looking to get long. Our entry levels are $1.50, and then down here at 70. Our stop is negative 30. Our only target is up here at positive 360. If we can, look for another target as this thing evolves, we'll do so. But we just have that one for now. And obviously you can see no change as of yet, or no trade as of yet, no fill as of yet, and we're sitting on the sidelines. This thing only goes until May 19th, which is a week and a half away. So it'd be a quick snap down and then a big snap up. So something like this, where it had a quick snap down and then a big snap up. And this market is pretty well fundamentally supported, so it is possible. But if we get into mid to late next week, especially late next week, and we still haven't gotten a fill, so we'll probably be looking this one off. But I want to stick with it over the next few days or so, at least until we get about halfway through this window. All right, so that's bull spread, live cattle, number 357. We have the backstory on this one. We have the entries and exits, so everybody should be on the same page. And then coffee. So this is strategy number 358 in yellow here. Coffee C, bear spread, long September, short the July. Margin requirement $1,300, just shy of $1,300. Then we got the risk reward levels here, dollar amounts. Backstory on this one: it has been a profitable strategy 14 out of the last 15 years. The one losing year was 2019. Sizing up that chart you're looking at right in front of you there relative to 2019, I don't see a whole lot of correlation in terms of the incoming price. Our benchmark is 715. The structure in 2019 was more flat, more sideways, and obviously you can see there's a whole lot of volatility in this particular spread. So I don't see a whole lot of correlation there. So net, I don't believe that 2019 has a significant chance of recurring for there to be another losing year. So that's why moving forward with this, the amount of room we're giving this. So our benchmark is 715. Our stop is 1200. That's 7.15 cents differential, and that's 12-cent differential. That dollar value equates to $1,800, and that would have been enough room to stay on board 15 out of the last 15 years. So we should be giving this thing ample room. So what's our approach? We're looking to get short. First entry level 915, second entry level 1015, stop level 1200, and then we've got our targets down here at 470 and 3/4. As you can see, out of the gate, this thing has been weak. So it may certainly be that this thing just craters, maybe revisits these lows back in April if it doesn't hold soon. And we might rethink this or just cancel the strategy. But it's definitely moving in the direction it's supposed to be moving so far. So we are not filled. And we are waiting on the sidelines. And there's no change to the strategy for this coffee. So that's where we're at with the risk-reward profile. That's where we're at with the backstory. And you've got the entries and the exits. So we should be on the same page. All right. So that is strategy numbers 357 and 358. If you have any questions, comments, anything of interest about this, feel free to let me know. I'm going to leave it there, and thanks so much for watching.